Hi, welcome back to Stock Talk. This is Joe Rabil with Rabil Stock Research. So in today's lesson, to start out the show, I'm going to go into MACD, but I want to talk about something specifically in MACD, and that's a specific pattern I refer to as a pinch play. And so as we go through the agenda, what the pinch play does for us is it kind of confirms strength in the trend, and it also helps us understanding that there's a bias shift taking place. And then the third thing it does is that it tells us that the stock has gone through, on that time frame, has gone through some form of a pause or a pullback. So it's a nice combination. I like to use it as a centerpiece for looking for patterns, and the reason why is because I want to use it with another time frame. But it can really get our focus on something that looks like things are starting to get prepared to move. So when we're done with that, I go through that lesson, we're going to go through the symbol requests that came through. So let's go ahead and get into this now. All right, so I'm going to start out with AMD. Now, what I'm doing is I'm using stocks that I have highlighted on my reports to my subscribers. And I want to use specific examples, and just about every single one of these I have received an email or something like that from someone who's been able to take advantage of it. The beautiful thing about that is that they're taking ownership of the trade, because I'm teaching them how to enter the trade. I'm highlighting stocks that have a strong bias, but what they're doing is they're taking the information I'm giving them and how I'm teaching them how to enter, and they're doing it themselves. So it's pretty powerful from that standpoint. But let's start by focusing in on these three keys to every pinch play. And what I want to do, and I've just taken the ADX off, I'm just looking at MACD right now, because I want to show there were 3 consecutive pinch plays on this AMD weekly. And what that is when the MACD line itself crosses over the signal line, and then during a pullback or pause in price, the signal line holds this, holds the pullback. All right, so that means the black line starts to pull back or pinch back towards the signal line, but it doesn't cross over. And so you should view the red line or the signal line as like the trend line. And when the black line is above it, our trend is shifting back to the upside. The strength of that will depend on if it can hold through a pullback. If it crosses right back down, that's not as good a sign. But if we hold that, that's a very good sign. So these pullbacks like this, and you can really see the pinch on this third one here. So what this is saying is we know that we're strong enough to cross over here, and then through a pullback actually hold the signal line, hold the trend, right, of the momentum. So I view that as pretty important. The other thing is that it's a bias shift. So anytime the black line and the MACD line crosses above or below the signal line, it's a shift in bias for me. I know that the bias is starting to shift in one direction or the other, so a move to the upside means that we're shifting to the upside. And then based on the rules of the pinch play, we have to have a 2 to 3 bar pause or pullback in order for it to qualify as a pinch play. So we're meeting all 3 of these criteria. Basically, this is telling us that we know we're not buying into an overbought condition because we're letting it pause or pull back. Now, sometimes a stock won't necessarily have 2 lower highs, but we'll see a clear pinch taking place. And I think that still qualifies, even though in my book I don't necessarily say that. That's essentially how you got to look at it as the spirit of the pattern. But in terms of what we're looking for, it's strength to the upside, shift in bias, and then through a pullback, we hold that bias, holding the signal line. All right, so now let me just give you a few examples because it plays out a little bit differently on the lower time frame. In this instance, we had a trend line break. Now we overran the signal line here, so I'm not necessarily taking the trend line break, but look at what happened right after. We got a pinch on this time frame. So we get a pinch here, and then not long after it starts to move up, we get a second pinch play. That's the 2 time frame pinch. That is definitely one of the things we want to be on the lookout for. Let's look at something like CCJ. CCJ, which actually was pretty recent. Now this was a bigger picture pattern. It is breaking out of a pretty big base, but it had a pinch play on the weekly. And then look at this on the daily chart. We had a pullback, lower high, lower low, and and MACD came down in the vicinity of the 0 line, ADX was low, we could have bought the trend line break here. So because this didn't show any weakness crossing back down to the upside, I'm willing to take this trend line break. So that's the second type pattern that can develop. Look at GRBK. So this was a beautiful, huge, big picture pattern developing. And after it made the move and then paused, I highlighted this on this pinch play here. And if you go back and look at what happened on the daily chart, this is a third pattern that can develop. That's where we make a higher bottom in price and then a lower bottom in MACD. That's a reverse divergence. And again, we can draw our trend line in. We can look for an upside crossover of the signal line. We can, but in general, I like to look for these big green bars to show up when we have a signal like that. So those are three examples, and I can give you a couple more. Let's look at PANW, this pullback here, and then after the earnings, we had a second pinch play, and on the earnings, it actually gapped up, but that was the trigger for the second pinch play. So pinch play here, another pinch play here, really nice pattern to be on the lookout for. Now, I do want to switch real quick. Look at this. This is happening on the monthly chart. We have a pinch play on the monthly, and then on the weekly, we get a undercut. We get an undercut and rally, and we form a reverse divergence like that. Okay, and then coming back up through here, probably I would go to a third time frame and use the higher pivot low on the daily. But again, another stock that has followed through off of this pattern, this pinch play pattern, which would have been highlighted off the monthly. Look at RIG. RIG was another monthly pinch play. See this pinching in, we cross over, we get above the 0 line, that's no big deal, that's no small deal, but then we get this lower high, lower high, lower high, look at that little doji pattern, and then if you go down to the smaller time frame, which was the weekly in this case, we actually make a higher bottom here and a lower bottom here, we get our reverse divergence, and we know we're looking for this big green bar crossing horizontally. So these are the different things to be on the lookout for when you get a pinch play. Now, the pinch play can actually be the lower time frame sometimes, but I just like to use it as a way. It's a really great tool to give me an idea of where to be focusing my energy. When they show up, they tend to be pretty powerful. The lower time frame can play out a little bit differently each time. All right, let's go ahead and move into the individual stock requests. If you're enjoying the show, hit that like button and also subscribe. And just briefly, my services can be found at rabilstockresearch.com. But if you enjoyed the lesson, you want to learn more about MACD and ADX in multiple time frames and how they relate to price in multiple time frames, I would suggest starting with my book. It's at rabilstockresearch.com/book. I'm offering it a discount in a PDF format right now, so feel free to take a look at that. Okay, let's start out with the QQQ. I think watching this NASDAQ 100 is obviously pretty important right now. So many of the big leaders are in this and controlling this, having an impact on it. And a lot of them are overbought and look like they should pull back. But I wanted to explain, I got a question regarding being stretched away from a moving average and whether I look at it as a percentage or or how I go about doing that. And I look at it, I just eyeball it. When I start to see separation in the movement from the 18 and where price is, and basically the lows of price, okay, once I start to see that separate, I view that as getting overbought or stretched away. Now, the reason why I don't need to worry about like the specifics of the percentages or anything like that, and the fact that I'm just eyeballing is because I'm looking for something to tell me that it's meaningful. Because if you look at it really starting from this bar, at the close of this bar, maybe the open of this bar, we had been stretched. And that went on for quite some time, and it's still going on really. I mean, this might not be the start of a pullback, although it certainly looks like it is. But what I wanted to point out is once we get overbought or stretched away on this time frame, then on the smaller time frame, which I would go to a daily chart, I would start to look for signs of momentum loss. And if you notice the way this played out, we got into June, which essentially is here. this rally, and then we went through a pullback consolidation, went to a new high. MACD did not confirm. We got a little bit of divergence. Now, this is still a pretty strong trend based on the ADX, but if we're looking for signs of momentum loss, we're going to see it here. After this broke out, went to a new high, this clearly made a lower peak. So at that point, now I'm probably thinking to myself, okay, I'm looking for a sign that this is going to reverse back and that we could actually pull back towards the 18, meaning the whole idea behind this is when we get stretched away, we're thinking it's going to come back down to that line. Well, what I do is once I get momentum loss here, then I go to the hourly chart and I look for a sign of a reversal. Now, if I zero in on this, let me expand it first. We broke the uptrend line. We came straight down. We didn't ever test it. And then we rallied back up. And you could have said this was a test, but we never broke through this low until this week. We came back, moved back down, and then we got a real test of this high, came back down, another test of this high, and now we're finally breaking through to the downside. Now, if you notice what's going on here to open, we're actually getting a little bit of a snapback from the open down here. You see how we gapped down and opened down here. Now, it doesn't look like it's that bad of a breakdown, like it's that oversold when you look at the breakdown level, but it's really far from these two moving averages. Okay, so it doesn't surprise me at all to see this snap back and rally back, and we'll have to see. I think the key will be is if we get the first test of this declining 18, does it fail there? Do we get a turn down and get a continuation? Because a 1, 2, 3 is just, potential reversal in trend. It's giving us presumptive evidence that there's a shift in trend, but we need one more lower high and one more lower low to truly confirm that. All right, so I wanted to make sure I covered that because I do think it's important not just to sell the moment it gets stretched away. The other thing you can do is just monitor for a big green bar or something like that. That would be a sign, or a gap up from this level. That would be a sign of climax as well. So right now we are starting the process of correcting. It looks like the 18 is starting to flatten out a little bit. I wouldn't be surprised if this MACD's tried to work its way back down towards zero. It seems like the highest probability is that we come back down towards this next support zone, 357, 362, and it should meet up with the 18. So somewhere in this area, say 355 to 358, the 18 is rallying and the price is coming down, and we meet up somewhere in this zone, somewhere like that. So that's what I'd be watching for on this index. It does look like a correction, but right now it just looks like a correction in an ongoing uptrend that was controlled by the weekly line that just got too far away. All right, so we're up against these old highs. I mean, there's a lot of reasons we're a little bit stretched away from the 18-month. I mean, it's a good, it would be very healthy if this paused or pulled back a little bit more and spent a 2 to 3 to 4 week consolidation pattern taking place. So we're hoping actually that takes place because I think that would lead to higher prices. Okay, let's look at the TLT because this is where all the action is this week. Let's start with the monthly chart. And essentially what I've been looking at is this going to go a whole new leg to the downside and really get crushed? I mean, I'm leaning towards no. All right, but I will admit the momentum is very strong. Okay, this is a strong pattern. If this were a stock, I'd be thinking, yes, we could get another leg to the downside. Just the fact that we're coming into this bigger zone here, the rates have already gone up a lot in a short period of time. I just think it makes more sense to me that we spend a little bit more time consolidating in this area here. But if I'm trading the TLT, I'm probably got a stop behind this high here, and I'm gonna let it go. I like this scale. So the original signal, I mean, this was kind of the topping pattern. Here's the 3 there. This was the 2 coming off the 18, and then we had a nice secondary signal here with the break of this trend line. So I guess the point I'm trying to make is that I do think there's downside risk, but probably just to these lows right now, I'm kind of expecting more of a channel to form at this point. But the trend is bearish. This is not something I'd be looking to be a buyer of. It's just a question of how aggressively you want to take profits, and that's a little bit more of a personal thing. Look at this weekly chart, how we rallied up, and this was a pretty key area around 100. We're clearly breaking below that. It looks like it wants to work its way down a little bit closer to these lows now after testing the zero line in MACD. And actually, just to show you, this was a pinch. This rally up was a pinch at the 18, and that kind of started the decline to the downside. In fact, we got sort of a second one here, even though it wasn't two higher lows. So those are bearish pinches that just developed and are kind of kicking into gear right now. Okay, I want to go through. So I got a few requests for energy, but I wanted to look at first I want to look at the USO, which is a pretty good proxy for what the crude looks like. Okay, and then I want to look at a couple of energy ETFs, and then I'm going to go through the few stocks that came through. I kind of think it's important what's going on here. Look at this weekly chart. Do you see what's going on? Do you see the trend line, or essentially this downtrend that was in place, is now being broken to the upside? We're finally getting this MACD back above the zero line. Now, it's not clearly above because the signal line's still below. It's also not clearly going with a lot of strength yet, because even though green has crossed above red and it has crossed above the 25 line, it has not taken out these last highs in red. And we need that to really say that the buyers are taking over again. Remember, the red is representing the seller strength, and the green is representing the buyer strength. So if the buyers are going to take over leadership here, and that's what we're looking for if we're looking to go long, we want to see this green line break out above these prior peaks. So that's what we're looking for. But we've got price starting to show signs of improvement. All right, so that's a good sign. You can see the momentum is starting to improve. A pullback towards 70 that holds would be probably a pretty good sign here for the USO. Now let's look at the XLE. This is the broad sector chart. And what I really want to point out is that what I've been calling for in this was a correction all along. It wasn't a topping pattern. It wasn't a big reversal. And the reason is we were pulling back to a rising 18-month line. All right, we still had a lot of support, big support area here. So I view that as pretty bullish. In fact, if you look at what was taking place on a momentum basis, both MACD and ADX confirmed the highs. There wasn't any divergence or anything like that. So the pullback here should hold when we have that kind of strength. Now, we're getting a pretty good rally. If we go to the weekly chart, we had an overrun in MACD, breaking the zero line. And when that happens, I tend to look for a little bit more of a complex reversal. Like I want to see a little bit more proof. I want another test of the 18. If that is successful, if we turn up from a test, then I think we could start to get really bullish on this index and some of the big integrateds, which and actually some of the big stocks in the oil area that not necessarily in the drillers or in the oil service. And the reason why is I'm going to show you the OIH right now. This is the oil service chart. Look at the difference in this. See how this is turning around? This really never really participated all that much, but it's holding the 18-month again, and it has a pretty good look to it. And then if we go to the weekly chart, look at this vertical move. You see the strength of this? This is much stronger than the XLE. This move, this rally has been a lot stronger. So I'm pretty encouraged by that. Look at the ADX reading that we're getting based on this move to the upside. Now, I do think we're going to have to pull back and consolidate. We've gotten a little stretched away from the 18. We've gotten back to the old high. It makes sense for this to come back and correct a little bit, but I would be watching this area. I'd be probably looking at the drillers, oil service, and I would be looking at the stocks like maybe not Exxon, because it's not really showing the same kind of strength. What Exxon's the next stock that was requested is a move up and then a pullback. Now, if you go and you look at stocks like COP or CVX, they've already done a rally here. This isn't really participating quite as well right now. I want to see a little bit more strength here and then a pullback. And if we get that, then we're holding the 18-month and we're getting proof that this is turning back around in line with the monthly trend. So that's what we're looking for. We want to see some strength showing up on this time frame. We want to get green DI breaking out. We want to get the ADX kicking into gear. If we get that, I think that's a good sign. What I'm telling you is if you go and look at some of the other E&P companies and the integrated guys, they are already showing that strength. This is kind of lagging right now. While it was one of the leaders during the pullback phase, it's now sort of lagging. So look at a stock like Baker Hughes. I mean, this is what we want to be focusing our time on. Look at this monthly chart turning around. Look at the 18 and the 40 rising. You see the strength in the rally off the 18-month line. Look at the weekly chart. Look at this move in a breakout period and look at the strength. Bar up, green, all these green bars, and then we get a pause bar, we get another pause bar. If we can get any kind of a little dip back towards here, look at what's going on in the ADX. It's rising above 25 based on the buyers for the first time in quite some time. The volume pattern looks pretty good. It doesn't look like an extreme move, like a climax move. It looks like the start of something with really good momentum on the daily. So we want to look for some kind of a correction or a pullback. So I wanted to show the difference between Baker Hughes versus the XOM, a couple requests that came in, and just take a hard look at what's going on in energy generally. Okay, look at GS. So this is where we look at multiple time frames and we try and figure out what is our tradable time frame here and what are our target levels if we're going to trade a specific time frame. So if I look at the monthly chart, I've got a flat 18. Okay, slightly rising 40, but basically a flat 18. I look at the weekly chart and I've got a slightly rising, but it's really flat, in the 40s flat. Right? I mean, this is not a trend right now. This is kind of oscillating. You can look at what's going on. It's oscillating sideways. It's trying to emerge, but you can't call it a trend yet. Now, you can see what's going on here. We've got real strength and a real breakout. We've got rising moving averages, and we're starting to pull back. This is our tradable time frame right here. We just finished earnings. We've got momentum behind this move. We can look for a pullback on this time frame. So if we get a pullback here, I'm going to go down to this time frame and look for one of my triggers to show up, and probably based on what's taking place in the form of a higher low and maybe even a 3, a 1, 2, 3 to the upside. If I get that, then I can play that. Now, if I'm going to do that, how far can I go? Well, what I would do is go to the bigger time frame and say, here's support. I've got resistance up here. So I'm going to use those areas for my target area. So I know I've got room up to about 380, let's say. So if I'm going to play this, I got to make sure my risk reward makes sense. If I'm going to buy this, I've got to put be able to risk enough or less enough, keep it small enough so that it makes sense to buy and look for a trigger up around 375, 380. So that's how I would go about doing this. This is the tradable time frame. This is going to frame out how much room I have to the upside. And these other time frames are just there. This is going to help me with the timing. But all these other time frames just help me determine how much room I have. We can definitely see how important this 380, 390 area is. All right, so that's how I'd be looking at Goldman Sachs. Now, Visa is a perfect example of how momentum can give us an early warning sign that there's something wrong. This stock was trying to break out of a pretty important level here, and MACD did not confirm by going to a new high. This went to a new high, but this did not, and look at what the ADX is doing. I mean, that's the one that really bugs me. Look at what this is doing. This is really, really weak. The worst part about this breakout is look at how green didn't get anywhere near 25, and now it's even below red. So we don't have any real conviction in the buyers here. I don't want to buy a breakout. If I'm in this breakout, I'm probably tightening my stop and saying, this is kind of bugging me. If I wanted to give this a lot of room to roam to the upside, I don't know that I'm still doing that just based on what's taken place here in the short term. So this most recent spike down on this earnings, I think a break below that, I would be very, very concerned. Okay, let's look at RIVN. I've noticed a lot of improvement in some of these EV guys, but the thing that's jumping off the page for me, and I don't talk about this a lot, but when I see this, look at this volume. I mean, oh my gosh, they're pouring into this. This is a big deal, okay? Now, Is it timely? Is it a trigger? Is the volume a trigger? No, it's a sign. It helps with my bias. It tells me, look, I want to be looking for the next true entry. This is real buying taking place. And I think that's a really encouraging sign. I'd like to see this consolidate back. I'd like to see this pull back a little bit. If we get that, and we got a little divergence finally in this, it tried to push to a new high and the MACD did not confirm. Now green DI is back below 25. I think there's a pretty good chance this pulls back a little bit and gives us an opportunity a little bit closer to the 18-week. Last stock, SNOW. Do you see what's going on? I want to look at this weekly really briefly. So what I've been telling my clients, my institutional clients, is how important this 200 area is. I've had guys that have been looking at this and they want to get in on a longer term play. And I'm just saying, look, until we get through 200, there is nothing going on here. Anything south of 200 is a no buy zone. We have to get it through 200 and then it's game on. Then we can start watching this a lot more closely. Thanks for joining me today. My research can be found at rabilstockresearch.com. Also, my YouTube channel called Invest Like a Pro. You can check that out as well. If you have any stock requests, send them to stocktalk@stockcharts.com. Have a great day, and we'll see you next time.